Good morning. Welcome all to the Genghis Weekly Investor Briefing. And in this briefing, we give you the highlights of the past week's events in the financial industry and what to look for investors for this coming week. Today, we have our guests, that is Mathew Kabeere from Fx Pesa, and our very own Chachi Logutu, who is the head of research in Genghis Capital, and Kevin Gige, who is our equities analyst at Genghis Capital too. My name is Daniel Ogeto, and maybe I may give you, I'm from the market department, and some housekeeping rules. For questions, kindly direct them to the Q&A section in the control panel. And you can also chat us any queries and questions that you may, which will be answered at the end of the. I give this time to Churchill to take it over and take us through the fixed income and macroeconomics.
Thank you, Dan, for that introduction, and welcome all who have joined the call. Okay, so I'll take you through the macroeconomic and fixed income and partly touch on the equities before calling upon my colleague Kevin to walk us through the equity segments. So starting with the review of the macroeconomic indicators that came out last week, on Friday's Kenya Gazette issue, Treasury gazetted the cumulative revenue and net expenditure as at the end of last month. So in regards to ordinary revenue, the actual amount was 840 billion, comprising of tax receipts at 784.9 billion and non-tax receipts at 55 billion. Two things that are coming out from the tax receipts. One is that looking at the run rate, basically the performance of this 785 billion against what could ideally have been the target by that month. We're looking like it underperformed by 14% against the target of 1.63 trillion. That is the overall target in this fiscal year. The fiscal year is ending on 30th of June. So you're looking like 14% underperformance by the month of January. So it's just telling us that looking at this run rate through the end of this year, telling us that we likely underperform by more or less 14%. But having said that, we saw that in the month of January, there was that reversal of some of the tax measures that were there in COVID-19 period. So that's where Treasury is saying that it will be able to at least make up for the shortfall that we've seen so far in the current financial year. Having said that, looking at the other issue is that based on the supplementary budget one that was tabled 2 weeks ago in Parliament and the revisions that have been done so far, we are seeing that the tax receipts, the target for tax revenue in the current financial year has been slashed by 40 billion. So that's another issue that is coming out. And looking at the gross domestic borrowing, that's as at the end of January, it was 504 billion, comprising of some arrears that were paid to counties, cumulatively 26.2 billion. On the flip side of the coin, getting onto the expenditure, recurrent expenditure was 559 billion. Development was another close to 148 billion. And disbursements to counties was 158 billion, comprising of 145 billion being equitable share. And then the other 13 billion was what's called the conditional grants that are given to counties. Public debt obligations or servicing of public debts, as at the review month, that was last month, it was 525.8 billion. And comparing to the ordinary revenue, that's close to 63% of ordinary revenue by that month. So looking at this week's calendar, we are seeing that the inflation rate for this month is expected by the end of this week. The previous number was at 5.7%, so keenly looking at February inflation rates. The other one is now the fourth quarter for last year. The unemployment rate is also expected at the end of this week. The prior number, that's for the third quarter, was 7.2%. It was a decline from a near doubling in the second quarter of last year, which was not hardly a surprise, considering that it was during the severe lockdown that we had in Kenya, or restriction of movements of people and goods during the second quarter period. That said, we could likely see, it could be a pointer looking at some of the leading economic indicators. There's been some rebound in activities. So there's a likelihood that the fourth quarter number will show that it won't be as bad or ugly as what you saw in the second quarter or even the third quarter. The other piece of report which was expected to have been published or publicized last week was now the quarterly economic and budgetary review. That is as of the end of last year. But looking at it's usually supposed to come 45 days at the end of the quarter. So we are deep into getting into the third month of the quarter, but we haven't seen it out. But we expect it to be released sometime this week. Moving on to the fixed income, last week we saw a reduction in activity in the secondary bond market, 22.5%. Week-on week decline to 16.5 billion. The trades were majorly on infrastructure bonds that has played out in the last 3 or 4 weeks following that IFB infrastructure bond issue that was the infrastructure bond that was issued in January. Moving on to the T-bills, we saw the first positive performance in 5 weekly auctions, performance rate of close to 125%. The aggregate amount that was received was 30 billion. Yields, now the yields across the 91-day, 182-day, and 364-day tenors edged up at the weekly auction, and we're seeing that it's been up 0.29% from the start of this year. Moving on to some of the liquidity trends, average interbank rate declined by negative 0.48% on a week-on-week basis to 4.01%. Looking at the open market operations, we saw CBK was majorly biased towards liquidity mop-ups. Through the term auction deposit, it's an instrument that CBK uses to mop up excess liquidity from the banking system. Cumulatively, what was offered by CBK was 35 billion between Tuesday up until Thursday. Each day they were seeking 10 billion, but then on Friday session, it sought 5 billion. The bids that were received were 23.7 billion. This is cumulatively. The bids that were accepted was 17.1 billion with a weighted average rate of 5.93%. Our estimates of net domestic borrowing right now is 302 billion, which represents close to 66% of the revised targets in the current fiscal year, 540 billion. Moving on to the week's trade, we're seeing that that infrastructure bond trade, the IFB1 2021-16. This is the 16-year infrastructure bond paper that was issued in January. It has taken outsized activity in the last couple of weeks, but last week somehow it eased off. So in as much as IFBs accounted for the lion's shares of the activity, specifically for this January infrastructure bond, we saw it wasn't as much as compared to the last 2 or 3 weeks. So right now the market is waiting the announcement of next month's primary bond papers or paper. And right now the trade that we are seeing is a buy on the FXD2 2018-20. So this is the second 20-year paper that was issued in 2018. We are seeing attractive entry levels in this paper as compared to the first 20-year paper that was issued in 2018, which formally is known as FXD1 2018-20. Both papers are offering the same coupon rate, 13.2%. The only difference is it's the attractiveness of this trade is on account of the accrued interest, because as an investor, as you're coming to buy bond, you have to pay up the accrued interest since the last semi-annual coupon payment. So that's the only thing that is making FXD1 2018-20 a bit expensive. But nonetheless, they are both trading at similar levels, but we are more inclined towards this FXD2 2018-20 trade. So the next bit is now on equities. Let me just do like a wrap up, and then I'll invite Kevin to come and give also his sentiments or even the market intelligence from a trading perspective. So last week we saw the Nairobi All Share Index up by 0.9%, and NZD20 declining marginally by negative 0.1%. The turnover rebounded in the order of 19% to 2.4 billion shillings. That's last week. Our top gainers, Samia bouncing back up by 20%. BAT Kenya, 14%, no brain around it. It announced dividends, 41 shillings and 50 cents as the final dividend, over and above the interim dividend of 3 shillings and 50 cents. So we are seeing that for BAT Kenya, it has combined 45 shillings dividend, which is attractive. It's around 9.3% dividend yield. So there's a no-brainer that it was a top performer last week. Kapchorua up by 7.7%. Top losers, we saw Olympia down 12.3%. Nairobi Business Ventures down 11%. And I remember our ex-colleague Gerald just pointing it out in the reports, in our weekly reports. It used to be part of the out of consensus trades, just warning investors not to speculate on this, not to continue speculating on this counter, having bounced back in the order of like 5 times what it was at the start of last year in December. So you're seeing that it declined 11% week on week last week, and also Salam declining another 11%. Of course, some of the highlights of last week was Longhorn posting first half loss of 169 million shillings. That was last week. Lemuruti issuing a profit warning for its next set of results to be released. And of course, Scan Group, that major announcement that came last week on Friday in regards to suspension of the CEO. At the moment, at least from analyst perspective, we still don't have a handle. We don't have a handle on what's happening around Scan Group, but we're likely to see more updates coming from the company as the days roll by. So in regards to foreign participants, we saw that the overall participants was close to 70% last week, and they had a negative cumulative net outflows of 271 million shillings. There was accumulation on Safaricom and Stanbic. Safaricom hitting fresh 52-week highs of 39 shillings and 25 cents, and they exited on EABL, KCB Group, and Equity. And these are the 5 counters that were traded. So let me call upon my colleague, Kevin, just to give some highlights. Kevin?
Thank you, Churchill. Once again, my name is Kevin Maina, Equities and Fixed Income Trader at Genghis Capital. I think the biggest highlight for most of this participation was seen in Safaricom, where we saw several all-time highs. Of course, thanks to a couple of things. I think last week we mentioned the story with Ethiopia, where Safaricom was shortlisted as one of the firms that will be getting or might get the license. So we saw Safaricom go into the debt market, I think, for around 55 billion Kenya shillings. This is a consortium where it's Safaricom, Vodafone, and Vodacom, but Safaricom have the bigger share, so they have 51% of in that consortium. So Safaricom, we may see, if successful, Safaricom spearhead activities of the consortium in Ethiopia, a market of more than 100 million people. So there's some upside there from market sentiments. Other than that, of course, again, we saw the declaration of the 0.5 shillings dividend. I think the book's closure is 5th March. So that's something else that could have fueled that rally in Safaricom. Of course, as the day goes by, we might continue to see some rally, but up until 5th March, I think that rally will die off, and we might see it come off at least by the 45 to 50 cents that had been declared in dividend. Something else that maybe I might add on that before I leave is Safaricom, which is the biggest stock in the Nairobi Securities Exchange. Once we see activity of Safaricom, we tend to see lower volumes across the board. So, for instance, data by the Capital Markets Authority shows that volume decreased in Q4 of last year by 24% to around 970 billion, whereas that was 1.29 billion in the same period in 2019. So we've seen quite some paper wealth erosion, especially by foreign investors who've been selling across these markets, the developing markets, and I think that might continue to go on until there's some certainty or direction regarding, one, the COVID, two, the ongoings in the states in terms of the stimuli fund, in terms of rates and the clear direction of where rates will be going. So until then, I think the market will continue to trade sideways. Chacho.
Thanks, Kevin. Just to put on the spot, I call you talking about the Ethiopia deal, but unless I'm wrong, Ethiopia Telecom came out last week, I think, as a rejoinder, saying that nothing is still on the table yet. So something also worthwhile watching. And another piece of information is now with the coming back of resumption of Parliament and National Assembly in particular specific, there are like 50 bills that were pending that hadn't been looked at, that had been tabled, first reading. That whole process takes time before they are assented into law. So one of the bills specific to Safaricom was, I think, an ICT bill that had proposed the breakdown of the telco aspect business of Safaricom and the M-Pesa into two distinct businesses. So there's been like it's being revived, that those 50 bills, among them this ICT bill, needs to see its way up until it's assented or it's rejected. So that's another thing that might even spook investors in the event that Safaricom goes the whole, in the event that that bill rather goes the whole extent until it's assented into law as it is, or it's passed into some amendment. So that's another layer of uncertainty that might come our way. But looking at the process of legislating a bill, we know that right now the focus is on the budget bills, particularly, and it may take a while before Parliament passes all these 50 bills that are pending. So it's something that is worthwhile to watch out in regards to Safaricom specifically. So moving into the sub-Saharan African space, looking at the peers, Kenya, where it sits in terms of its price to earnings metric. This is a metric of how expensive it is. And rule of thumb is, if you look at it comparing with the average, Kenya sits at 11.9 multiple on the price to earnings metric against an average of 9.6 multiple. So that makes it slightly expensive. Its dividend yield is slightly lower than the average at 4.1% against 5.2% in the African space. Getting on to corporate calendar, as mentioned by Kevin, the interim dividend of 45 cents in Safaricom. The book closure is 5th of March. That's next week on Friday. We have BAT announcing a final dividend of 41 shillings 50 cents, book closure on the 16th of April, and then Kengen 30 cents final dividend, book closure on 29th of April. We also expect that next month, banks majorly to start announcing the full year earnings, their earnings, something to watch out from next week in earnest. Finally, equities trading ideas. I will still retain our long-term bias towards stocks with fortress balance sheets, at least to weather this COVID-19 storm. Specific, we are looking at a long-term buy on Kenya Re. It's part and parcel of a value sub portfolio. Its current price to book, it's also another metric, over 0.2 multiple against the insurance industry of 0.65%, 0.65 multiple. So that's quite a deep discount. Year to date, it has had a rally over 6.9%, and we are seeing the current market price at 2 shillings 48 cents at a discount to net cash per share of 2 shillings and 77 cents. So that's it from our end. Let me stop it here and invite Mathew to pick it up from here.
I think just a second, Churchill, before we get to Mathew. And thanks. I think I might have missed yesterday's from Ethiopia. I didn't see that. But just one thing that I think has gone around over the last 1 week was three things happened, three significant things. And one was we saw sentiments from both Vodacom and Vodafone praising Safaricom and spearheading it as or praising it as the leader of the consortium. So we saw that. Second, we saw Safaricom close debt deals, I think around 56 billion Kenyan shillings. Part of it, of course, to dividend, part of it to capex. So I honestly, I could be wrong, but I don't foresee why they will do that without a significant advances in Ethiopia. And lastly, I saw the Premier of Ethiopia going live and talking about, I think this was sentiments in Q3 or Q4, I'll confirm that, talking about this deal and how they want to do the market liberalization for Ethiopia. So this is part of the changes that the Premier was bringing. And this is part, like our BBA, it's part of the things that he said he won't rest until it has gone through. And also icing on the cake is that Ethiopia will be exposing 45, will be disposing 45%. The government will be disposing its 45% stake in it. And this is cash that they'll need for other budgetary support purposes. So I could be wrong, and I think we'll debate more on this. But to me, this is a deal that is going forward. So, Mathew.
Yeah, thanks, Kevin, for those additional sentiments and perspectives.
Right, good morning, colleagues, ladies and gentlemen. My name is Mathew, and I'll be taking you through the opportunities in the global markets. Hope you can see my screen clear. Okay, so looking up to what has been happening for the past 1 week, pound sterling jumps back to the top of the currency performance as negative interest rates talks get pushed away. Then we had the purchasing managers index above expectations, and of course the easing of the coronavirus there might be looking up to opening of the economy, but not yet. But still, those are the things contributing to the bouncing of the sterling back to the levels of 1.4. Again, deep freeze in Texas on the oil side. We had the oil prices going really up, of course, of the cold weather and really very big production station was not really on during that time, and that pushed up the prices quite high to the levels of 60, all the way from 50s all the way to 60. But again, on the oil, it's a sector that has really gained since the April dip last year, and it has gained maybe all the way to like 60%, something like that, and it's continuing to gain up pace. And of course, that one was supported by the cutting back of production by the OPEC Plus and those oil-producing countries. But again, we don't know whether they might be revising the supply in the coming 1 month, maybe for example in April, but again, they are struggling with balancing production over consumption. So again, on the oil section, we don't know if they if they are able to deal with that as much as they are expecting the opening of the economy. We don't know whether we might be getting either oil moving up to the highs of maybe 100, but it's something a good area for us to watch. Global board surge, of course, sent a negative mood in the financial markets, right, last week. And again, gold got dumped, although it picked up a little bit on Friday. And even now, it's again, we are getting a little bit of bullish moves in the market. So that's what was there last week. And moving ahead this week, of course, inflation setting the market tone was the new on the side of RNBZ and Powell. That's what we are eyeing for. Inflation rings the bell. Of course, with the retail sales numbers came up above expectations last week, and we have heavy monitoring and fiscal quantitative easing programs. Of course, because economies want to get their people off these negative and this low growth. Of course, the quantitative easing programs continuing, and of course, the dollar index fell to the levels of 91. That's the reason why we saw that a little bit of gold is trying to get again some support, and we have opportunities in the market, and of course, that one is looking up to the pound and oil. The main event in the coming week, as for the New Zealand dollar, of course, the RBNZ meeting, and the central bank is expected to hold its interest rate. Remember, interest rate is something that really has effect on the weakness of the strength of the currency. It's something that can have a long-term effect, having in mind that it's not an indicator that can keep on changing every now and then. So have to really keep checking on that. Fed Chair Powell testifies before the Congress, and again, we know this is coming amid a great and a very important announcement or a decision that we might be waiting for to see how soon that the US might be releasing the stimulus. But again, it's a really contested area because, of course, there is there is a need for the leadership to lobby for the support of the other side, that is the Republicans. Of course, it's the vice president who breaks the tie, so they might have to lobby pretty much well to have that bill going through. But again, it's something that we want to wait. And if it happens that they release the stimulus, remember it's very huge for the US. And you're looking at the USD as a global reserve and a currency that major commodities like the oil and gold are priced in, is something that's going to move the markets a little bit much more. So we keep our eyes on that. The calendar this week is quite busy. Of course, today, starting with the German IFO, New Zealand retail, and then, of course, although not listed here, we are also expecting news on the announcements from the UK Prime Minister Boris Johnson and ECB Lagarde speech. Really very important, and we need to keep watch on that. On Tuesday, of course, talked about Fed Chair Powell testifying, and on Wednesday, of course, release of the crude oil inventories on the US and New Zealand official rate. Again, our eyes on the New Zealand dollar. On Thursday, again, preliminary GDP quarterly for the US. Again, a very nice market news that you might want to follow up. And on Friday as well, the Michigan consumer sentiment, plus all those others, the core PCE price index. And that's what we might be looking up to drive the market in this week that we are starting today. Products to watch, of course, New Zealand USD. And of course, as we're expecting that the New Zealand bank is going to hold the cash rate, right? But you can see that the pair is still maintaining its bullish movement. You can see that it's trading above the moving averages, and it's been maintaining this trend for the 5th week in a row. Of course, this is where we saw it in 2018, 0.728. Those levels, that's where it is testing currently. And if it breaks above that level, then we might see the movement, the upsides of 0.735. And if it's able to maintain that bullish movement, of course, depending with how the news come up, then might again see to the upwards of 0.74. And of course, the 7.4 is a psychological level that we might really wait to see if it is hit, and if it is broken again, might look for a further upward. But currently we have support levels at around 0.718, right? And if by any chance it pulls back to those lows, of course you see it will be breaking below the 200 daily moving average. Yeah, and that one will signal again a likelihood of the pair tumbling all the way to 0.7103. The reason why I'm speaking about these levels, and we won't really tell you exactly buy at this level or sell at this level. Remember, these markets, we can have pretty very fast changes, right? So it's always good to be conservative when you give these insights. It's advisory. Make sure that you wait for those setup to really materialize if you would want to take a position in those areas. So make sure that the way you trade them, if it's something that you trade, make sure you wait for those levels to materialize and you get confirmation. But again, take this as advisory. So for the New Zealand, that's what we're looking up for, and might watch out for an opportunity there. Another product we were looking at is gold, and there's so much volatility. And of course, looking at higher bond yields. Of course, higher bond yields, they signal awakening of the economy, or a little bit growth of the economy. And if that one is setting in, of course, we have a little bit increasing of interest rates, right? But you see the safe haven metal faced a downward pressure last week, and it really breached a very important level, the 1780 levels. And we had the gold price going all the way to the lows of 1761, but of course it has got some support. On Friday, got some support, and currently, when I check out the market, because at the time I was taking these, this chart that you have there on the screen, that's where the levels are. But currently, it is already testing the 1790 resistance level. If it's able to break through that one, again, we might be having it moving to the 1805 psychological level. But in the event that the resistance holds at that point of 1790 is not able to break, then of course might see the gold again taking to the lower or the downside all the way to 1750s and even 1745. Again, here we're looking at the strength of the dollar really determines, and the dollar index determines the movement of gold. It's a commodity which is priced in terms of gold. And one way that you would want to really successfully trade on gold is make sure that you are well informed on the movements of the dollar index and the inflation and how it's getting along with the bond yields, right? Because it's really, they have some correlation, and it's very important to check out on that. So for today, maybe wait up to see whether it's going to break that 1790 levels. And of course, currently it's trading below the moving averages, all right? You might want to see whether if it reaches that level and proves or gives a significant confirmation that is getting on the upwards, maybe might be able to target to the highs of 1805 and again see how you can well get into the market. But this is advisory again. If you trade it, have tight stop loss levels, and of course be careful, because this is a market that really changes very fast, and it's a margined market. Remember, you're trading with the amount which you deposit in your account, you're given leverage just to make sure that you can trade a high amount of money. It exposes you to a likelihood of getting more profits if the direction of the market is really going on your side, but if it goes against you again magnifies the losses. So this is advisory, and make sure if you're taking positions in regards to what we're giving you here, you really have very tight stops and again, very good targets. And on the stock side, remember I always say that you might not want to focus only on currencies and try to pick on stocks as well. The trading on these stocks just the way you trade locally. But again, here on this side, remember when you're trading on the global markets, for example, on our platform, you don't own any share. So you're speculating purely on the movement of the prices, but it is based on the underlying asset. So a good opportunity as well. And it's always good to check on when these companies are announcing their earnings. And here we have a few picks for you that you want to look at. Today, Nautilus; on Tuesday, Home Depot, HSBC; Wednesday, NVIDIA, right? You know, NVIDIA is the company that really manufactures the chipsets for manufacture of gaming consoles and even these computers that we're using. They're really on high demand. So this week, of course, expecting that it might be giving this week on Wednesday, they will be giving up their earnings reports, and there is a projection of the expectations of the market is that you're going to have a higher earnings and, of course, higher revenues. And if it comes out positive, of course, might be a good stock to look up to, of course, get some opportunity. Of course, Jumia, since the time, and I've always been talking about the Jumia, since the time it was listed, it has made up to 60% gains, right? And currently making some little bit of pullback. Of course, maybe I think investors are waiting to see get the announcements of the earnings. But again, check out on that. Salesforce on Thursday. Again, Salesforce is expected to give some really positive announcements on the revenue and earnings. So just want to look at that. On Friday, IAG, Berkshire Hathaway, and check out for those stocks. You would trade those stocks the same way you trade on the currencies. The only thing that you require to have is a little bit higher margin or higher equity in your account, because you know there is little. The leverage offered on the currency is not as high as the leverage offered on stocks. So for the stocks, the moves might be a little bit quite fast. Okay, sometimes there are gaps. So you are required to have a little bit higher margin from your end to contribute a higher margin as compared to the currencies that are quite liquid. So, ladies and gentlemen, that's what I have for this week. And make sure you keep up to the fundamentals, and follow what the technicals are telling you, and have very tight risk management in your trading, and of course you will be successful. Over to you, Dennis.
Thank you very much, Matthew, for your presentation. And now we'll maybe start have a look at the questions that have been brought upon us. Ian Wangai is asking, with such key events in the FX market, reading from investing.com and Forex Factories, how can we use this info to know the direction the price will move? Matthew?
Good question there. Remember, of course, when you're reading on the investing.com, all that information, investing.com, Forex Empire, there are so many of them there. The most important thing for you to watch out is the general fundamentals, of course, like the economic calendar. Remember, when you're looking at those views, they are personal views, like just like the way I'm offering you these views here. Remember, it's just insights to give you a little bit of confidence in your trading. If that is how that's a financial instrument you're looking at to trade. So when you're looking at those insights, make sure you look more into the fundamentals on the actual factors which are affecting the movement of those financial instruments, and then check out if what is being given outside there and what we are giving here is really getting along with your analysis in the market. But it's really very important to check out for for that information because it really influences the movement of those financial instruments. So check out for that information, listen here what we are saying, check out those levels that we are telling you, but make sure that you really wait for those setup and just use this advice and advice you get outside there to give you more confidence in what you are already doing.
Okay, thank you very much. Ken Mogane is asking, could you comment on the Scan Group saga and what it means for the share? Kevin.
Hello.
Yes, I can hear you.
So, okay, thank you. So the news out that the CEO had, and then Churchill is speaking more to this, the CEO had been suspended. I think we've seen quite some action in terms of how they've been issuing the special dividends, and I don't think I've seen details as to the specific of why the CEO had been suspended. But of course, such sentiments are, well, there's pros and cons to it. One is the company that is actually doing something in terms of if it was graft, for instance, or malpractices, the company is actually doing something, and that's a positive for company taking action. On the flip side to that is then whatever was happening in the company under the board's watch, the company might, on the Securities Exchange, might be punished for that. So as of last week, there are no certain movements, but this week for sure, we're going to keep an eye on it and we're going to update. Churchill?
Thanks, Kevin. Nothing more to add to what Kevin has said. As we know, this announcement is one of those curveballs. No one saw it coming, and I think since my time in this industry, I've never seen this kind of announcement with such magnitude, whereby a CEO has been suspended for further investigations. Of course, we don't know the nature of the specifics of what's going on in the company for us to give something more comprehensive. But just from the price sentiment, we saw it tanking 7.7%. That was on Friday session. As people still try to understand what's coming out from this event. But
Churchill, can you hear us?
I think he's gone off.
Okay, I think we seem to have lost him. Maybe, Kevin, you can maybe tackle this next question from John Kamau, who is asking, is it the right time to sell KCB for short term, or is it expected to continue with the trend?
KCB, for us, we have an exit on it, of course, thanks to recommendations from the playbook, or our target price rather. So we've seen it come quite a journey so far, and Churchill and the team have advised that it could be time to exit for the short term. So we have an exit on EABL, Equity, and KCB. Of course, we advising an accumulation on Safaricom and Stanbic, which happens to, of course, also be our top traded stocks. Of course, Safaricom, thanks to the dividend on all of them going to Ethiopia, KCB, because quite of the rally it's come to, and there could be, people are anticipating since due to the government ownership in the company, we could be seeing an interim dividend as the government really needs cash right now. So that could be one of the things guys are preempting in the company. Other than that, we have, of course, Equity, EABL, and Stanbic Holdings.
Okay, thank you very much. We see Felicitas Ndego has raised her hand. Maybe we can allow her to ask her question live. Felicitas, maybe you are allowed, you can talk. Okay, she has disappeared. So I saw a question about derivatives. Maybe Kevin, you can talk about derivatives for those who are new to it and how to get into it and the margins.
So derivatives is broad and new, quite understood in our market, but one of the longest investable assets in the world. So Ian Wangai asked the question, could we also speak on derivatives, like actual numbers of how one can trade? So one, to start it off, is Genghis Capital is licensed by the CMA and NSE to trade derivatives. The derivatives we currently have, the market is not too broad. As you all know, we only have, we've not securities most of our markets, like say commodities. So far we only have stock option derivatives, and those are, again, on a handful of stocks, not all the 62 or 65 listed stocks. So far we have derivatives options on Equity, KCB, Stanchart, EABL, PAT, and a few others. How it works is, of course, you have to be our customer, so you have to open an account with us. The account needs to be funded. And how it operates, so we have a clearinghouse, we have margins that we issue and that are issued by the system automatically. So once you come to us and your account is fully funded, we go in the market on your behalf to buy for you. Depending on whether you want advice from us, we give advice on such as well. But of course, also if you've done your own research, we can go to the market for you and either go long or short for you. That's either buy or sell for you, and keep track of the account for you.
Okay. Peter Irungu is asking, what's your take on the securities lending and borrowing and its effect on market liquidity?
So it's one of the flashy and fancy things that have been talked about over the last couple of weeks. CMA has been, I think, in talks to issue the securities lending and borrowing for quite some while now. So it's something we have really been waiting for, together with stuff like DMA, that's direct market access for clients, and etc. So it's for us, and from my colleagues and the market sentiment generally, it will not be the mover. It will not be the mover and shaker as such. We have seen a couple of securities exchange programs, like we had the small market cap stocks that were being advised. We saw homeboys coming into the market thanks to that. We had we had stuff like Nairobi Ventures and all these other things. So these were expected to sort of incentivize the lockup or the retail investors, but we haven't really seen much uptake to that. And for those who've really taken, we haven't really seen success to that. And those tend to disincentivize the market. So securities lending and borrowing is big, especially in markets like South Africa. We have seen data on that. But for our market, I don't really think it should be a move and shaker due to the ownership structure. For instance, say Safaricom, government owns 40% of that. When you come to these other companies, our market participation, as you saw, was just shy of 70%. So I'm keen to see how that will pan out once it's in the market, but I don't really think it will be a move and shaker. Churchill, any comments on
that? Thanks, Kevin. I think you've exhausted the point, so thanks for that.
Okay, thank you very much, Kevin, Churchill, and Matthew. One last question is from Linda Resi, who I think I'll handle this: how to open a Genghis account. For you to open a Genghis CDS account, you can do so from the comfort of your mobile phone by downloading our application called Jikuze. It's available on both the Apple Store and the Google Play Store, where once you register, you'll be able to have a CDS account, a CDS number, and you can be able to buy and sell shares in the Nairobi Stock Exchange. And as our client, you will also have, you'll be able to, through our partners, that is Fx Pesa, you'll be able to buy and sell shares and commodities and trade in commodities. That is, of course, via the Fx Pesa trading platform. And I think that's about it for today. So thank you very much for attending this, for taking time to attend this webinar. We look forward to seeing you in the coming week. And from us, we wish you a good investing week, and stay safe. Okay, bye-bye.